Welcome to the Remarkable Retail Podcast, Season 3, Episode 10. Can you believe it's October, the 10th month of the year? I'm Michael LeBlanc.
And I'm Steve Dennis.
Well, Steve, once again, you and I get to chit and chat together. It's you and me projecting from that great Canadian actor, Rick Moranis, and his classic Honey, I Shrunk the Kids, to Steve, I think we've shrunk the store. That's what we're going to talk about today. And that's what we talk about a little bit later. But before we get into that, let's talk about the retail news.
Busy week.
It's a busy week. Now, we never talk about these guys, so I'm really thrilled we bring them back up. Amazon.
I feel I'm sure they're very neglected. I'm surprised we haven't gotten any nasty grams from the PR department.
Yeah, well, we got a couple of things to talk about them, which some are quirky, some are interesting. So let's talk about Whole Foods. So a couple of things are happening at Whole Foods. First of all, on a business level, they've added back in a delivery fee. So let's start there. So tell me about that. And this, as I'm sure everyone knows, Amazon owns Whole Foods, but let's start talking about this delivery fee thing.
Well, one of the big features of Prime has been that there is free 2-hour delivery built in, or there was free 2-hour delivery built in, but they announced this week that they are going to eliminate that, and there is now a $9.95 charge for 2-hour delivery. Still free 1-hour delivery for Prime members if you want to go pick it up. But this is a pretty big change. They were testing it in 5 or 6 markets for a while. But they just announced that that's going to go everywhere, which has gotten, number one, a lot of pushback online from customers complaining about it, feeling like they kind of changed the deal in terms of Prime membership, which is a paid membership. But of course, nobody likes price increases. But to me, what's interesting about this, and I kind of think the folks in Bentonville and Minneapolis and other places were breathing a sigh of relief, because as we've touched on a bunch of times, the cost of grocery delivery is generally pretty prohibitive for the retailers. So to the extent this either allows more people or more retailers to charge to get some of that money back, or encourages more customers to come to the store, which I suspect will be the bigger effect, that's a much better financial outcome for retailers.
It's been an interesting journey, right, with Amazon buying Whole Foods. I mean, if you cast our minds back a couple of years ago, the announcement was made. It was, oh my God, it's the end of grocery. And I think it took like $1 billion out of the market, which was just fantastical, just ridiculous, because, at the end of the day, it's a 400-store chain, 450 stores, is but 14 in Canada, I think, close to 400 in the US. It's positioned at a certain price point. I thought when Amazon bought it, I was going the other way. I thought they were catching a falling knife, basically. I mean, Whole Foods was not doing spectacularly well. And I didn't really see the fit. I didn't see the fit culturally. I didn't see why they needed to. I mean, there's other groceries you could buy. They paid, $14 billion for them, and Amazon can pay any amount of money. They could have bought anybody practically.
Yeah, I mean, in the scheme of things, it's a relatively inexpensive experiment, you can argue. A lot of people have had thoughts on whether this was really the way for them to learn about the grocery business, that they had designs on a bigger plan, which they seem to be executing now for mainstream grocery. Because you're entirely right. Whole Foods, in the scheme of things, is very much a niche player. That's not where the big money is. It's going to be much more where they're going with Amazon Fresh. But the other thought was, okay, well, it's a more upscale consumer, and if they get more data about the upscale consumer, perhaps that helps them in the fashion business and some other aspects of their growth plans. I don't think that's paid off so much, but maybe the grocery part has been good R&D for them.
There was a lot of riddles for me, because, when you've got some crazy percentage of the U.S. population belongs to Prime, I think you got a lot of data. Now, Amazon hasn't really been that strong. When I think of them, they haven't been that strong in food. That's not been a successful area for them. They've tried a bunch of things. That's been modestly successful. In my local Whole Foods, which I shop, they've got some things that I can't find. But I see some, every now and then there's an Amazon product that shows up every now and then, or a coupon or something. They do, I have to say, they baffle me a little bit, because I live within a driving range of one of the 14 Whole Foods. I'm a Prime member. But they never connect those dots for me. To me, it's like,
Yeah,
with all the vaunted kind of AI, I'm an obvious candidate. Like you couldn't get a more obvious candidate in some ways. Anyway,
yeah.
the other thing we should talk about Whole Foods is a change of leadership, right? Talk about that.
Yeah, John Mackey just announced his retirement. He's one of the co-founders and has been at the helm for, I don't know, 25 years. I don't know,
Yeah,
quite a long time. So
yeah,
that's a
long
real,
time. Yeah, yeah.
real passing of the torch, or whatever you want to call it. He's been there a long time.
End of
He's
an
not,
era. It's like an end
yeah,
of an era, really, for Whole
yeah.
Foods.
We were talking off mic. Is there anything to read into this? I don't know. I don't think so. Certainly Whole Foods has not been doing well, so maybe it's time to try some different leadership. But he's been there a long time for sure, and he's probably ready to go play golf or get a boat or whatever one does at that age with that kind of money.
Listen, that team launched an entirely new concept of grocer. It's a fantastic concept. Those are hard to come by, like creating new concepts. So all kudos to them. Um, you know, that's a career you could look back on and be very proud of, for
Sure.
sure. So we wish him a great retirement and
Yeah.
strike him well if he happens to be a golfer, kind of thing, right?
Yeah, and he's also, just probably worth mentioning quickly, he's also been kind of one of the main proponents of the so-called conscious capitalism movement, along with Kip
Yeah.
Tyndall at Container Store, and a lot of other people. But he really got that movement going, and that has grown throughout the world, really. So that's, I think, a pretty important contribution, not just to retail, but to the bigger business world.
Yeah, yeah, a lifetime achievement award. If we were able to grant one, we would do it today. I'm sure
Maybe we should start like an awards gala or something.
we should.
Put on a
It'd
black
be
tie
fun.
and get some flowers or something.
Yeah. One last quirky thing about Amazon. I was reading, and I think you mentioned it as well, that in New York City, the Macy's on 34th. I guess there's some signage that you can buy above it, and Amazon, being cheeky, I think is trying to buy the signage or something on top of Macy's.
Yeah,
Is that a metaphor or something?
yeah. It's There's just so many about this things. We could probably do a whole episode on retail trolling. But if folks are in Manhattan or have been in Manhattan, the Herald Square Macy's store, there's this big sign. I think it says "World's Biggest Store" or something like that. It's this huge sign. It's been there for a long time. I don't know that it's changed very much
Yeah,
over the
yeah, yeah,
years.
yeah,
And
yeah.
Amazon wants to. The company that I guess owns the billboard has rights to sell additional space or something, and Amazon apparently wants to get that space. So, I don't know. We people may have seen this over the years where uh, usually smaller retailers that are perhaps more petty than Amazon is. Sometimes we'll buy a billboard above a store, with an arrow or something like
Yeah.
that. But I don't think I've seen a retailer of this size and reputation do something quite so in the face of a rival. So I guess this is being litigated. So we shall see by the time all of us descend upon New York for NRF whether we'll get to
Yeah,
take selfies
that's
with the
right.
Amazon sign.
That's right. We will take Amazon with what will be known as the mean-spirited sign, the Grinch of retail. All right. Well, let's enough about Amazon. Let's talk about earnings. Another batch of earnings and some information on Warby Parker. What have you distilled from this week's earning calls?
Well, a lot of just general retail market activity. So the three earnings announcements I thought were the most interesting. Well, let's start with the good news. The good news, for the most part, was Costco, which had, I want to say, about a 10 or 11% sales increase, and an even better earnings increase. So those were pretty strong numbers, even though they alluded to concerns about inflation, supply chain, and all that kind of stuff. So they managed some pretty good numbers despite some of those headwinds. And also, I would have thought, this has come up several times where, with COVID being a little bit less of an issue, that grocery isn't having the kind of banner year as people go back to eat out
Hmm.
more. And Costco's not a traditional grocer. They've got a mix of other stuff, but I think Wall Street was expecting that their sales might be tamped down a little bit, and they weren't. So that was pretty impressive On the flip side, well, let's say the moderate side, Nike's earnings were actually pretty good. I mean, their sales, a good solid sales growth. Most people would be happy with the kind of sales growth. I think it's like 19% or something in the US, 11% in China, which was a little bit low for them. Their margins were actually pretty good, but people got pretty concerned because they talked about all the supply chain challenges they're
Mm.
having, and they basically guided much lower for the balance of the year, and I think into next year. And I think we talked about this maybe a few weeks ago about how much product Nike, but others are having made overseas and in Vietnam in particular. And Vietnam just nothing's coming out of there, and it doesn't look like much is going to come out of there
Yeah.
for quite some time. So that was a big damper on Nike. The one that was pretty surprising to
Let
me,
me
and
let me
really,
let me
yeah,
let me say something about Nike first and that supply chain. A couple, three things. I was thinking, and I read it in an article. I wanted to get your feedback on it. That Nike is going to use this as a lever to even choke further their distribution. In other words, if we can't make as many products as the distribution channel can absorb, let's just put the best ones on Nike Direct and further our ambition,
yeah,
like kind of make good, so to speak, make good of the problem. That's one thing I want your opinion on. The second one is what I've started to observe is this country shopping. I saw a brand said, "Well, I'm going to move my shoemaking to Indonesia." In other words, I'm going to go
right,
to a place that, yeah, the vaccination rate is equally low, but the government seems to be a little less caring. I think that's going to come back and bite a lot of brands
yeah.
in
I don't
the
love
rear
that.
end if they're not
Yeah,
careful. Yeah,
yeah,
exactly.
yeah,
But anyway, let's talk about the strategy here, because they're not the only brand. Apple has said the same thing. I think Apple said they're going to miss out on like $4 billion of sales because they can't
right.
get enough product made. Is this the time to say, well, listen, if we can only, you and I remember those allocation discussions that would inevitably happen with brands,
Right. Yeah.
right? And now, is that something you think you might see?
Well, I think one of the big questions, which I don't have an answer to, is, how much of what we're seeing right now is a 6-month phenomenon
Mm,
versus much, much longer. Certainly in Nike's case, and I worked with Nike a little bit in the beginning of their journey here, so I know a little bit about at least the birth of that, and I don't have any inside information that I would share. But I mean, I think they've been pretty clear of their intentions to build out this consumer direct offense, which is both their e-commerce as well as their owned various formats. So this just makes it easier for them to lean into that. But you have the general issue of, if you're really going to both maximize your margins as well as control your destiny, and product is in short supply, I think it's just acting on behalf of the shareholders and the long-term interest of the brand. You're going to lean into protecting the stuff that you control. Um, but there's this risk with all these strategies of going so strongly to your own controlled channels that the distribution partners that help build the brand over decades in many cases, and I'm not just talking about Nike,
yep.
really any of these brands, um, they extend your reach. They attract a customer that's a multi-brand customer, maybe not just Nike specific or Under Armour specific or whatever, whoever that might be. So there is some risk there. But that's why I say if it's a 6-month thing, I think people will just, hey, it's business. This is short term. If it looks like that's going to
Mm,
cause them to really even double down and squeeze out, kind of take advantage of a difficult situation to squeeze out some wholesale partners that maybe they want to have, then that I think that could come back to bite them. But I think it's pretty
yeah,
hard to know when this is going to start to really clear up
yeah.
materially.
Yeah, I mean, last thing I'd say on that is, having had some discussions on the other side, they'll hold a grudge and say, okay, I remember when, and there's more. Like, one door closes, another door opens. Let's just
Sure.
go carry these other three brands. And, it's good to be king. It's not always
That's
such.
exactly what I was,
Uh,
I was going to say. Yes, but it's good to be king, and uh, for better or worse, a lot of these brands really understand how strong they are, right? And they leverage that. But yeah, that can change over time. I'll just give a quick anecdote. Um, when I was at Neiman Marcus, I think the general belief among in terms of retailers like Neiman's, like Saks, like Barney's, was that, we controlled access to the consumer, and we could even be tastemakers. And so, you couldn't do that power play with Gucci or Louis Vuitton, but a lot of the other brands that weren't as strong, we felt like we had the cards, and we frankly flexed those muscles a lot. Well, that was that worked in the 80s and 90s and maybe until 7 or 8 years ago, but it doesn't work so much anymore with all the
Yeah.
explosion of online choices and these brands going consumer direct. So yeah, I think that you have to be careful, to take the long-term perspective, because clearly situations change.
Right on. All right. Well, that's enough about that. Let's move on. There's some other couple of interesting pieces of news. Talk about Bed Bath and Beyond's
Yeah,
numbers.
well, the train wreck, I guess you could say, which is probably charitable in the earnings announcements. Bed Bath and Beyond, folks may know, certainly it was struggling for quite a long time, but they brought in a whole new leadership team. Mark Trident from Target, most notably, but a whole bunch of other senior executives, and they've been implementing not only extensive private brand programs, remodeling stores, bringing in new brands, and so they actually were posting some pretty good numbers, seem to have some pretty good momentum. And then they announced this quarter where sales retreated significantly. And they talked about how traffic, I think I don't have the number in front of me, but the traffic to their stores in August was down 20 something percent,
Wow.
which,
Wow.
on the one hand, you could say, well, yeah, COVID in certain areas has kind of come back, but that seemed to be really out of whack with what a bunch of other people are reporting. They also, like everybody, are talking about supply chain, cost of goods, inflation, those sort of things. And so both the warning aspect that we saw in a lot of retailers, but in particular the traffic declines, caused people to run to the exit. I think the stock was down 20-25% the day of their earnings
Mm.
announcement. So that's a little bit mysterious, not good news. The other kind of market news, is what I would put under the kind of IPO boom heading, which is a number of retailers, some of which we talked about in the past, like Allbirds and Warby Parker, going public. But we've got Guitar Center, Claire's, Mattress Firm. So you got these kind of hot, sexy brands like Allbirds and Warby Parker going public, and then you got these other three brands which were bankrupt last year or
Right.
so, also going public.
Yeah.
So we'll see how that sorts out. But the one that did actually go public this week was Warby Parker, which we talked about with Dan McCarthy a couple episodes, I guess, at this point. And they went public. Stock rose a lot. I believe they closed as we're
I saw
recording this. I believe
50%. I saw.
it spiked a lot. Where it's sorted out, I haven't looked at the market today. We're recording this on Friday, but their valuation at the close of their first day of trading was about $6 billion. Fun fact: same day, I think, Bed Bath and Beyond, with their announcement, their market value is $2 billion. So here you've got this, really well-known retailer with 800-900 stores, I guess, multi-billion-dollar business with a $2 billion valuation, and then Warby Parker, which loses money and maybe does $600 million in the year ahead, $6 billion
Hmm.
valuation. So, future of
It's
retail,
become a story.
yeah,
I don't know. I think Warby's become a story stock versus a stock that trades on fundamentals. I mean, clearly,
yeah,
as our guest pulled it apart, and as we discussed, they're a small business. I mean, they're not a big business. But boy, I got even more certain when I saw those numbers that they're going to try and consolidate the market. I mean, with that kind of valuation, that's a pretty big storehouse of cash to go out and not cash but value to
yeah,
go out and,
yeah.
and start scooping companies up. All right, let's move on. Let's talk about Target. So they're making an announcement around holiday. Tell me about what you perceive of their latest announcement.
Well, pretty much they're kicking off the holiday season October 10th, which is a little early. I think most
Yeah.
people would say. On the one hand, as probably everybody knows by now, particularly if you've been in retail for a while, the the holiday season, the Christmas season, just seems to keep creeping earlier and earlier and earlier. So, to a certain degree, not that surprising, but I guess they're kind of officially kicking it off with their holiday deals. But I think a lot of this, aside from just kind of cutting the line and trying to get out there before Amazon or Walmart and everybody steals their thunder, is a
Hmm.
lot of the supply chain issues. I think that the story about products being in short supply, uh, I think is transcended from just being industry insider kind of stuff to a consumer story. So I think this is largely in response to what consumers are likely to be doing. So I suspect we
Hmm.
will see every other retailer on the planet probably do some version of a competitive response. Exactly what that looks like. But yeah, I think Christmas is going to come early, whether it turns out to be a lump of coal or not. Uh, we'll see.
Well, not according to Rod Sides, our last guest.
No,
There seems to be growth there to be had. So whether you're, the perennial issue, are you jumping too early, too soon, the right amount? 10-10 seems like they're celebrating some one of those Chinese holidays
yeah, that's right. That's right.
versus,
Yeah,
versus
exactly.
Black Friday.
Yes, wasn't Alibaba that
But
announced it?
maybe, yeah, I was confused there for a bit. Anyway, we'll watch and see. We'll watch see the reaction, the competitive reaction. Um, so there's been this big company that when everybody says, I was on a panel this morning, e-commerce, you'll die without it. You got to be omni. Everybody goes, but wait, there's one very successful retailer that has no e-commerce that might be coming to an end. Talk about that.
Well, really, kind of the whole category of off-price retail, which I'm sure most people know, the off-price category, TJ Maxx, Ross Stores, Burlington, a bunch of others, has been one of the fastest growing categories for a decade plus. Most of these retailers have opened, hundreds, if not thousands, of stores and have seen good growth, but virtually no e-commerce. In fact, I think it was Burlington that
Mm-hmm.
had e-commerce and then closed it down in COVID, which was seemingly counterintuitive. But HomeGoods, which is the home furnishings off-price division of TJX, they announced this past week that they are going back into e-commerce. Um, so that was a little bit of a counter narrative. Um, I guess two things I'll comment on. One is I always thought it was a little bit funny, and it gets to kind of this whole siloed thing of thinking about e-commerce having to be a transaction channel, as opposed to, yes, being a transaction channel, but also being an enabler of store sales, and particularly with buy online, pick up in store. There's this intersection between physical and digital that's important.
Yeah.
Also, maybe
Yeah.
you want to go see whether there's inventory in the store before you go down there. And so, to me, it wasn't so much about e-commerce as a transaction channel. It was really digitally enabling across channels. But the pushback from the off-price retailers, which I will say in my experience is mostly BS, is that, well, we don't know what we're going to have, so how could we possibly put
Yeah.
it on a website? And they like to create this illusion that everything is like, fell off the back of a truck, and that's why it's such a great deal. But so much of the product for these stores is made for them, so they absolutely know what they have. And yes, there is a portion that's more treasure hunty, but so I think there has been a little bit of a smoke and mirrors game, but a big part of it, which gets me to my second point, is concerns about profitability, because the price points are fairly low, and as we've
Yep.
talked about, returns are quite high. So there is a real concern about how to profitably do e-commerce in the off-price channel. What HomeGoods is doing, which is interesting, is they are going to charge, I think it's $11.99. Cheat sheet here.
Hmm.
I think it's $11.99 or something like that. Sorry, I can't find it in my extensive notes. I have to fire the research assistant. But they're going to have a charge for returns through the mail,
Oh.
but you can
Oh.
return for free in a store. And they
Well,
are also going to,
that's not that uncommon, actually. That's not that uncommon. Well, I mean, a lot of retailers don't charge you to return, but they make you pay the shipping or
right,
return it free, right?
right. So this is, I guess,
Um,
one lump, a fixed fee, and um, there will be also same delivery charge if you spend less than $119. So it seems like they must have worked out the unit economics to try, and
mm-hmm.
keeping it simple.
Mm-hmm.
They could have a sliding scale. There's a bunch of other ways of doing it, but so
Sure.
I think they're kind of building in the disincentive um, to ship low priced items. One of the other things is that on average, and as I'm sure many other people know, the average price points in home furnishings tend to be higher than the average price points in apparel. So there is some
Yeah.
sense that it's a little bit easier to make the home goods part of TJX,
Right.
uh,
Yeah.
you know, attract incremental business, but also not be too much of a hit to profitability.
Well, and the returns are an order of magnitude less than apparel, right? Home goods return in the single
Yeah,
digits, apparel returns in the, pick a
right.
number,
Generally
30,
speaking, you don't
40%.
have to worry about the fit of a towel or something like that, right?
Yeah.
You may not like the color, you may not like the color when you get it home, but yeah, it's not a fit fabrication
Yeah.
issue so
Yeah.
much. Yeah.
Yeah. Right on. Last not least, Nordstrom move into DNVB. What is that? Nordstrom move into DNVB home. What
Well,
is that? I don't even know what that
direct to
is.
consumer. Okay, all right. Too many acronyms. That's the first thing. So, Nordstrom in general over the last year or so, I want to say, has been dialing up home goods. They're primarily an apparel, fashion retailer, pretty small home presence. They've been expanding that a bit online, expanding that a bit in their stores. They seem to be making a bigger move now. They've signed up with about, I think it was 17 or 18 of these digitally native vertical brands, mostly small, to offer those products online and in
Hmm.
store. But the big move, the interesting move, I think, is they're going to, within their newish Manhattan store, they're going to have a two-story department uh,
Hmm.
focused on home. So taking a very small area and really dialing it up. And I think this is an interesting move. I mean, number one, certainly the home area has been a hot area, so it's just kind of leaning into the
Yep.
trend. I know
Yep.
when I worked on some things at Neiman Marcus, but for some other folks, there's always been this. If you got the customer that's buying apparel and shoes and all this other stuff from you, what else do
Yep.
they buy? Well, they buy towels. They buy so some of these luxury brands have had a actually pretty decent home business. The thing that I think is worth watching is lots of these department stores, particularly the high end department stores, their stores are just too big for a digital age. And so, as you think about, Saks is putting WeWork in there. Nordstrom seems to be thinking about selling merchandise that also they can sell online. So whether this is,
Hmm.
the fact that they're
Interesting.
doing it in New York City, I think is interesting because that's a brand new store or almost brand new store.
Yep.
So I suspect, and it's an interesting place to test things because it's certainly not your average market. So I suspect we'll see them push the edges a little bit more with their home offering and more of
Hmm.
their chain, suburban
Hmm.
suburban stores or
Yeah. Yeah.
other cities. So,
Hmm.
but I think it's
It makes
logical.
sense to
It's a
me. I mean,
logical move for them.
yeah, yeah, yeah. It makes sense. I mean, as you know, in New York, they have the women's and the men's across the street from each other,
Right.
basically, right?
Yeah.
And the newest one, probably, I would argue, probably going to be the last department store built in America in a traditional
Hey.
way. It's 6, 7 stores. I mean,
Yeah.
it's 6, 7 floors. As you know, I do tours or used to, but will again do tours, and it's a base level shoes, and by the time you go up to the fifth or sixth level, I mean, it's a great place to be alone with your thoughts. Let me put that charitably. So, you know, you know, it's not a bad idea to start thinking about. We tried to do that at Hudson's Bay, right? We had a big property, the flagship store, 7 floors. The
Right.
six and
Yeah.
seven were furniture. Listen, if I wanted a moment alone with myself, I'd go sit in the couch up on the 7th floor when I worked there. Nobody would bother me because it's tough to get people up 7 floors to
That
look at
was the
furniture,
that
man.
was the model, I think, for the major urban areas. I mean, if you go to you go to Sydney, you go to Tokyo, you go to London, you go to Paris, 6, 7, 8. I mean, Marshall Fields in Chicago, I think it's 10 stories, something like that. The Macy's we were talking about earlier.
Yeah,
That was the
yeah,
model in these major cities, and you had a little bit of everything and restaurants and the whole deal. But I think even for my experience at Neiman Marcus and at Sears as well, there are a lot of these 3-story suburban stores as well, which are just massive. And the third store tended to be home and credit department or whatever. And I can
yeah.
tell you, even in the halcyon days of department stores, not a ton of traffic on the third floor. So,
Yeah. Well,
creating
it's not exact.
something
It's not exact. It's not exactly an impulse good either, right? I mean, it is a
correct.
destination shop,
Now
so
that I
to
mean,
be
I think the
fair,
theory was the stuff on the third floor. Um, was either HomeGoods and frequent stuff, or personal shopping or something like that, because the customer's coming in and you put some of the couture brands or whatever.
Yeah.
It's not the traffic
Yep.
impulse for sure. But I think it will be interesting over time to see, not just with the higher end department stores, but the Macy's of the world, with just these massive stores. And, what do they close off that top floor, or do they find something
Yep.
interesting to do? And it's sort of free real estate in one way of looking at it. So, that, I guess, opens up
Yep.
that can cut both ways, I guess. But I think for Nordstrom, this certainly is a logical move. And I guess the other thing I'd add about it quickly is I really like what Nordstrom is doing, what Target is doing with, certainly as we talked about with Target, pushing their private brands, having something that's a great value but
Mm.
proprietary to them. Nordstrom's been pretty aggressive. We talked with Drew Green from Indochino about bringing in these brands that have a great brand value proposition but don't have a ton of distribution. So they're not exclusive, but they're semi exclusive, and that's a point of
Limited.
differentiation. It's a way of driving perhaps some incremental traffic, and creating an image that you're at more the leading edge of what's next in
Yep.
news. So.
Well, all right. That was our news of the week. Now, before we get to our you and me just chit and chat, and I want to remind the listeners, or conversely the viewers, well, if you're viewing this, you already know we have a YouTube channel, and it's bonus content, because you and I chit and chat for actually closer to 20 minutes, half an hour, but we kind of, for time, we kind of trim that down to about 10 minutes. But if you want to hear our full discussion, we get into some fun stuff back and forth. Visit our YouTube site. And just look for Remarkable Retail, and we'll be there. But for now, let's get into this Honey, I Shrunk the Store discussion. So let's kick it off.